Hey, what's up guys? Bennett here. In this video, taking a look at Blackrock's ETF that they're trying to get approved and Fidelity coming in the race for probably an ETF in the United States. So what I want to touch on are going to be those two things. Also, very important what's happening with the Bitcoin dominance. We crossed 50% just today, the first time in over 2 years. Taking a look at the Howey test and really all of these cryptos that have been named securities and what I think the future holds this year, and also what the SEC is going to do to the rest of the altcoin market. But before I dive into those things, we have the founder of Luna, Do Kwon. He is imprisoned for 4 months in Montenegro because he was found guilty of using forged travel documents. Now, we don't know if this will be the last time he is behind bars or if they will get him for what he did with Luna. I know there's a lot of people that want to see him and other founders behind bars for a lot of the damage and carnage that they either deliberately or inadvertently or unconsciously caused in this last crash. But we will find out soon what happens. So really quick, I want to talk about Webull and a way for you to get up to 12 free fractional shares. Basically, you open up an account and deposit any amount to get 6 to 12 fractional shares. I've been using Webull for a while. They are kind of like Robinhood, but I find them to be a little bit better and a little bit more advanced, like the charting tools. So there's a link below if you want to sign up and get some free stocks with Webull. So let's dive in really quick. We have Fidelity, rumored to file for a spot Bitcoin ETF, but there is already a Fidelity Bitcoin ETF fund, which it may be structured differently on the Toronto Stock Exchange here, and it supposedly just tracks Bitcoin. So the 6-month returns are 53%, 1-year returns are 32%. But my guess is that Fidelity wants to bring this to the United States and have it on a US stock exchange. So if Fidelity and Blackrock can get their ETF on the market in the United States, that would probably drive the price of Bitcoin up very, very quickly. Now, I just hope that what Fidelity and Blackrock want to do is a spot ETF and not a futures product. And because of the Blackrock ETF filing, Bitcoin reclaims over 50% market dominance. So taking a look at this chart from TradingView, you can see that it is 50% now, and the last time or so it was 50% was April of 21. So April of 21, that was right before we ripped into the first peak of the bull market we had in 21. You can see April 21 around 50%. It dropped to 40% in May. That's really when the altcoins began to go crazy, especially those DeFi altcoins like Uniswap and Aave and all of those. Those absolutely ripped and did like a 10, 20, 30x in a matter of months. So when the altcoins rip higher, we see obviously the Bitcoin dominance get lower. That's how it works. So back in January of 22, basically the end of the bull market, the Bitcoin dominance got to 39%. So what does this mean? Well, it could be a reaction to Blackrock and Fidelity obviously introducing their Bitcoin ETF, but also what's been going on with the SEC essentially calling all of these different cryptos securities. So we had the SEC lawsuit against Binance call Cosmos, Binance Coin, BUSD, which is a stablecoin, and CODI securities. The SEC lawsuit against Coinbase called all of these securities Chilla's Near Flow, Internet Computer, Voyager Token, Dash, and Nexo. And then we have this last list that were deemed securities: Solana, Cardano, Polygon, Filecoin, Sandbox, Decentraland, Algorand, and Axie Infinity. So far, though, Ethereum is not a security, and obviously Bitcoin is not either. And I think everything that's going on with the SEC coming after Coinbase and Binance, I don't think this is the end, and I think this really ties into what they want to roll out in the world. The IMF is talking about envisioning a new class of cross-border payment platform with a single ledger. So that is obviously incredibly centralized, and this is their CBDC. So I do think there is a direct connection between what the SEC is doing, cracking down on all these altcoins, and possibly attacking Bitcoin next. I don't think that Bitcoin is just going to be let to go run as high as it wants to. I do think they are going to crack down, and they are going to take away on and off ramps, but But anyway, I think that's directly connected with CBDCs, the FedNow program, and really these bigger objectives that they want to do. The federal government, the SEC, the IMF, they don't want Bitcoin just to become this alternative cash. They don't really want that unless they could profit from it, but really it's more than profit. They want to control, because people that have billions or trillions of dollars, or the people that create money, they're not looking just to make more money. They're looking to literally have control and more control. I mean, really, the market cap for cryptos is just over $1 trillion. That is nothing. Fidelity itself has $4.5 billion under management. So when you look at the crypto market, it's not really a threat in and of itself at all. The threat really, I think, is Bitcoin. These altcoins really aren't a huge threat, but Bitcoin is, because as the dollar gets more and more manipulated and inflated, they realize that the more people learn about Bitcoin and its immutable monetary policy, that people are going to flock to it. And that is something that would definitely scare them. So guys, that is basically it for the video. I think that the Bitcoin dominance could easily get higher, and especially if we go more into a bear market, which we absolutely may. I mean, we saw the equities, especially the tech stocks, rip over the last 3 to 6 months. Facebook, we saw Tesla and all these other stocks, Nvidia, of course, rip. But we're seeing the crypto market, Bitcoin, just kind of stay the same. And I think that the pressure from the SEC is really keeping this industry down. So it's definitely not correlated right now to tech stocks, which ironically is what everybody wanted. We wanted to see this decoupling from Bitcoin, crypto, and the stock market, especially tech stocks. But now we're seeing it in a way that does not help people that hold Bitcoin, because Bitcoin is down, tech stocks are up, but whatever. So at the end of the day, what is the best thing to do? Well, it's probably just to dollar cost average or buy more Bitcoin. Altcoins are risky, and we're already seeing a lot of SEC pressure coming down on altcoins. I can imagine the SEC just saying that all ERC20 tokens are securities, and that would probably crush the market. The market would go down in a total, maybe 20% overnight, and then it would slowly maybe start to come up. Remember, the SEC just controls what happens in the United States, but what happens in the US does have a massive ripple effect for the rest of the world. So the safest thing to do right now is just to dollar cost average and hodl Bitcoin. Altcoins are still a little bit risky. We don't really know what's going to happen with those. So that's what I'm doing. So guys, thanks for watching. Till next time, talk with you soon, and bye for now.